when you are searching for businesses, there's two main principles when it comes down to searching for acquisitions. And this, by the way, is the same for properties, it's the same for partners, it's the same for recruiting staff members. When you're going to search for anything within the business world, you're going to have on market or open market, and then you're going to have off market as well. How does it even apply for recruitment? You have people that are not looking for a job, you go and headhunt them, and then you attract them to your business. Same way, just like for business acquisitions, you're going to use these two principles, which is open market or on market, and then you've got off market deals. Yeah. So of course, it goes without saying that you're always going to get a better deal when you go off market, or you've got more chance of getting a better deal when you're off market. Now that does not mean that you can't get good deals when you're going for the open market. There are plenty of good deals available everywhere. All you need to do is have your deal hat on. Yes? When you have your deal hat on and you are committed to the process of getting a deal done that is good and brings value to you and is good for your business and good for your income and is good for your long-term goals, you will be able to get a deal done. Right? You have to be resourceful. You have to be able to want the deal, and you have to be able to know how to get a deal done. But as long as you know all of these things, you will be able to get a deal done. So we're going to talk about open market first, and open market is literally brokers and websites. Okay, so business brokers and all of these, like there's websites which are available now. Yeah, so Biz Buy Sell, Business for Sale, Dalton's Business or something, whatever. You do Google search, right? Whatever your industry is, business for sale. Okay? So let's say, for example, you are in the IT repair space. Yeah, so you say, okay, IT company for sale. Let's say, for example, you are into selling cars, car dealership for sale. It's pretty straightforward. It's not difficult, right? Google search, basically. Now, brokers get a bad rap. I give a bad rap to brokers in my videos. So, of course, you'll see in other videos where I say brokers don't know what they're talking about, so on and so on, which is true for majority of the business brokers out there. But there are some really good business brokers, by the way. I'm not saying all of them don't know what they're talking about. You know, when you are dealing with brokers, when you get to a certain stage in acquisitions, like when I'm talking to brokers, I know so much more about acquisitions than they do, especially the people on the front line. In a brokerage firm, you might have one or two partners who know the same as me, for example. Yeah, so they know the same amount that I do with regards to acquisitions and business sales, mergers and acquisitions. But the people who are working for them, they don't know, because they've never progressed the deal to the end. They've never actually purchased a business or sold a business themselves. Right? They're working for a company. So they don't know what they're talking about. However, you can get some good deals with brokers. If a broker knows how to value a company properly, and this is why brokers get a bad rap, because they get a business. Let's say, for example, there's a business, right? And that business is doing $1 million in profit, because valuations are based on profit, right? That business is doing $1 million in profit. That business is going to be valued at 3 to 5 times multiple, depending on the industry. Okay, so obviously if it's technology, SaaS, something like that, it's going to be more than that. And it's going to be SaaS is not valued on profit, it's valued on revenue, but that's besides the point. Okay, generally speaking, 80% of the businesses out there are going to be valued at 3 to 5 times multiple when you have $1 million profit business. Okay, $1 million in profit. What they're going to do is that they're going to talk to the seller, and they're going to say your business is worth at least 5 million. So what they're going to do is that they're going to say that that's the minimum price that you can achieve for your business, but we are going to get, for example, 8 million or 10 million. Now, I'm not saying that that the valuation can't go to 8x. I've got another video which talks about valuation, and I also do say that valuations can get to 8x. In fact, can go even further than that. But there's circumstances about how a valuation can go that far. But when the business broker says you're going to get minimum 5 million for the business and possibly 8 million for your business, you know, the seller, the only thing that they can hear is 8 million. They don't care that you said 5 million. They only care that you said 8 million. Why? Because of course, when you're selling something, you want to achieve the maximum result for yourself. Yes? When I'm advising my sell side clients, and I'm saying to them, right, this is what we can achieve normally. And if all of the ducks are in the row, and the right buyer comes along, and the circumstances are correct, and all of the stars are aligned, and everything's done properly, that's when you can get 8x, right? But I say everything needs to be perfect in that state, and there needs to be a right buyer as well. But other brokers, they say minimum 5 million. But if you do find a good business broker, and they are, for example, valuing things sensibly, and they do. For example, I'm currently dealing with a business broker right now, and they have valued the business sensibly. In fact, I looked at everything that they add back, this particular other broker. I looked at every single thing that they added back, and I looked at their valuation, and I agreed with everything. I only had one question with regards to the add back because it was unclear about the item itself. Okay, it was unclear regarding the item itself, and I'm getting further clarification on that particular item right now. Otherwise, it was a good valuation. I agree with the valuation. Obviously, I'm going to negotiate. It doesn't mean I'm not going to negotiate. I am going to negotiate. And of course, I'm going to try and achieve the best deal that I can for myself. I'm going to do it in a way that's sensible. I'm going to do it in a way that we can possibly get the deal done. So there are good deals to be done via brokers. You just need to find the right ones, the right brokers I'm talking about, and the right businesses and the right sellers. And you got websites in which business owners, for example, they list their own businesses. Now, those are a cross between open market and off-market deals. Off-market deals. Okay, they're a cross between the ones where the sellers are listing their own businesses. Now, the thing is that sellers who are listing their own businesses, normally they're micro businesses or small business, the lower end of small businesses. So they might be doing 1 million or 2 million in revenue. Because any good business owner, business person would know that if you hire an M&A professional who knows what they're talking about, they're going to be able to get more money. They might have to pay higher fees, but they're going to get more money for the deal because they've got a professional handling the sale in the right way. Okay? So that's why when you're going to websites, find out, is it a broker listing it or is it a seller, direct seller listing it? So you can get a good deal there as well. To be perfectly honest, I've never had a good experience with a business owner who has listed their own business for sale and on one of these websites. They actually don't know what they're talking about, and it's unrealistic what they want. The thing is that business owners don't know the values of their own business. So you always have to take a pinch of salt and you have to educate them about what their values are. One good thing about on-market deals is that you can normally get a deal done faster on on-market deals. And the reason for that is because brokers have, good brokers I'm talking about, corporate advisors, M&A corporate advisors, they have compiled a data room, they've collected the accounts, they've got the legal matters in order to some extent. And that's what I'm saying, you can really see the difference between a good broker and a bad broker. Because a bad broker, the worst broker that I've ever come across, the guy sends me a sales brochure document, information memorandum. He goes, there's this business for sale. Are you interested? I said to him, send me the accounts. He goes, I don't have the accounts. I said, okay, that's fine. Have you seen the accounts? He said, no, I haven't seen the accounts. So I said to him, you've not seen the accounts? I said, what have you seen in terms of financial records? He said, nothing. I said, so where did you get this valuation from? He goes, oh, the seller told me, the business owner told me that this is what it's making. I'm like, come on, guy. Business owners don't know what they're talking about. They don't, in terms of true profitability of how to value a business, they don't know what metrics to use. So how do you know what they're talking about is even true when you haven't checked any financial documents? Anyway, coming back to good business brokers, they've compiled this data room, they've got all of the accounts in order, they've done evaluation on the business. As long as it's sensible, then you can get a deal done faster because the business owners are in that mindset already that they want to sell. They've actually put it on the market, and therefore you come in, you step in, and you're basically, you hit the ground running. As long as you can get a deal negotiated, which is good for you and good for them, you can hit the ground running. And sometimes, for example, they already have legals appointed, they have solicitors and lawyers appointed, they have their accountant already appointed, and that's really good. Because If you've got all of your deal team ready, then you can hit the ground running as well.